Hi, David Burson, Chief U.S. Economist at Cumberland Advisors. Talking now with Stu Hoffman, former Chief Economist at PNC and now advisor to the Chairman at PNC.
Yes.
Stu, welcome.
And others.
So
Yes.
let's talk about financial markets. So we know in recent days Fitch has downgraded the debt of the United States. Does that have any real impact on the economy?
I don't think it does. As some wise people, including you, pointed out, it was well known. I don't think it has much impact. Yields have gone up on the 10-year, now over 4%. I think that's more due to some fundamental strength in the economy. GDP is turning out to be stronger. Employment is turning out to be stronger. We've got some good inflation numbers, but they're going to turn back up a little bit the next couple of months. So I don't think the Fitch rating means that much in the short run, but it's just a sign that the deficit's getting worse and the U.S. fiscal situation, both politically and financially, is a mess.
Well, you talked about long-term rates up, maybe up further. Let's talk about short-term rates.
Right.
Is the Fed done tightening? If not, why will they raise rates further, and how much more do you think they would go?
Officially, we're saying they're done tightening. I think, though, you always deal with risks or odds around a baseline forecast. I think they're much greater that the Fed has to go again. If not in September, by November. Why? The economy's stronger, the job market is resilient, and we've had some good inflation news, and I think the core inflation will continue to get better, but not very rapidly. And this big run up in oil prices, even if it comes down as it typically does after Labor Day, is going to mean some of the headline inflation numbers in August, September, maybe even October are going to be somewhat disappointing. So I think that puts the onus on the Fed, and certainly Powell said September's a live meeting. The presumption is that they won't do anything, but I think the odds are if they do something at all, it'll be to raise rates in the fall rather than hold steady.
Well, Powell has talked about, again, live meetings going forward, and that the market may be under-anticipating how long the Fed will hold rates high. If we get a recession, and of course the recession has been put off,
Yep.
do you think that the Fed would ease during a recession? Let's say we get one in the first half of next year. Is the market actually then right anticipating Fed easing, and Powell can't say it's going to be a recession, but is the market right anticipating a recession next year and the Fed easing then?
Well, we do have a shallow or mild recession in our forecast in the first half of next year, which will help bring inflation down. It's probably not just U.S., there'll be some global component. So in that sense, I think the market is right. Maybe not in March, but in the second quarter, the Fed will start to lower interest rates. I think the short end will come down much more than the long end, so the yield curve won't revert, but the steepness, the inversion, will maybe be cut in half. So I don't think the market is unreasonable thinking that by next spring, summer, almost a year from now, the Fed will be unwinding some of the hikes, not as quickly as they raised them, in reaction to a shallow recession that helps bend inflation down, but we're still not at 2%.
Last question, it's a two-parter. What is the thing that you think could go best for the economy and financial markets? What is the thing that you think could go worst?
I think the thing that could go best would be the soft land. That the Fed doesn't have to raise rates, and that economic growth by GDP and by jobs slow down but continue at 1 or 2% and 100 to 200,000 jobs, and that goes on for another year. That's the best news in terms of earnings, in terms of the fixed income markets, even the currency markets. The worst news, I always focus on oil. If oil goes back up, OPEC's obviously, or at least Saudi Arabia, has cut prices or cut production. If oil goes back up to $100 a barrel, and I'm talking about Brent crude that's 85, I think that's a real negative for inflation. I think it's a negative for global economic growth. And of course, I'm leaving out, because I have no idea what's going to happen in Ukraine and Russia and the effect that has on the markets and frankly on the world financial markets and the world's particularly commodity markets.
Stu, thank you so much.
My pleasure.
Thanks,
you.
everybody.